Hi everyone, PK here. Thank you for being with me. I was actually invited on to a podcast, the Australian Property Investment podcast, run by Aaron Christie-David. And in that, we went through my own property journey, personally, professionally, and, from a property investing perspective. I was so grateful to be invited onto that podcast, to talk about my highs and lows, my highs and successes, my lows and learnings in my own property investing career. Where we also kind of discuss whether to buy quality property over quantity of property. Everyone knows that I like to buy, and my clients oftentimes, not always, but oftentimes buy sub $500,000 properties. So are they something that we should be preferring over quote unquote blue chip 800, 1 million, $2 million property? So is it a game of quality versus quantity, or is that even a fair question to ask? And we also went through some really interesting locations across Australia where investors can invest and that will likely still perform even while rates rise. So these are the sorts of things that I was invited on to discuss in this other podcast, and I'm sharing with you here on my podcast. I hope you guys enjoy it, and get a ton out of it. Thank you for being with me as always, and here it is. Thanks, guys. Welcome to the Oz Property Investment Mastery Podcast. My name's PK, and I help busy people build passive income by buying top 5% growth and positive cash flow property and build a portfolio using data without wasting months doing research, spending weekends at inspection or catching flights, or dropping $10,000 to $20,000 on buyer's agents every single time. So if you're confused, lack confidence, and just overwhelmed with all the information and marketing misinformation available online and don't know where to start, then this show is for you.
Today's guest, when we speak about community, nails the community side on what they're trying to help and pass on that information and seeing property investors succeed. And if you're not familiar with him, you better fix that and check him out online, because he's got a wonderful following, a very loyal and advocate following as well. Welcome to the show, PK Gupta.
Thank you so much, Aaron. I appreciate the invite.
No, it's wonderful to have you here, and we're very privileged. I know that you've, like I mentioned, you've got not only a great track record personally, but for your clients now starting to see that track record filter through and giving them the confidence and the ability to buy as well. So we'll kind of cover that and a lot more as well. But to give our listeners a bit of background, a little bit about you, you're a dad, a husband, so automatically I'm like, I feel you, I hear you. Great position to be in. And also you're a property investor, and looking at your own personal portfolio, we're talking about a mix of residential, commercial and developments as well. That's now giving you that 6-figure passive income. So I want to say a huge congratulations to you, mate. Taking action, getting the results as well, mate. So well done.
Thank you, man. I'm very grateful.
Based in Brisbane, and I've seen that you're helping people all over the country, and off the back of using high cash flow properties along with high growth as well. It's very much data-led, data-driven, with a view to get that passive income as well. And when I say community and your audience numbers, we're talking over 10,000 subscribers on YouTube, 15,000 deep community on Facebook. That doesn't happen overnight, and that doesn't happen without proof of concept as well. So that's what I really want to pick your brain about as well. So congrats, mate. But before we kick off, it's what I call the 3 Ps. A bit about yourself personally, professionally, and your property journey, if you may indulge us.
Okay. So personally, I mean, you kind of hit the nail on the head. I try not to identify as a property investor per se, because it's kind of a weird thing to identify myself as. But like you said, dad, husband, all that kind of thing. I think one thing that I think is super crucial to anything in life is meditation. So, when you talk personality or personal, I'm a big advocate of meditation. I meditate 2 hours every morning. So yeah, that's a little bit about me.
Lovely. And what AM club do you subscribe to if you're getting up for 2 hours there?
Well, I'm at dad's. I have a 3.5-year-old who's at kindy at the moment. So I
Yeah.
try to get up at 4:30, but to be honest,
Nice.
like these days the alarm gets snoozed maybe 3 or 4 times. So it's more like 5 o'clock. But it could be better, but I'm still happy I'm doing it.
Fantastic. That's great. And I mean, that's a practice that you've built up probably over time, and the discipline around that. Well done.
Thank you. Yeah, yeah. It doesn't happen overnight, but it's really transformative as whoever listens or watches your show, and if they do it,
Yeah.
they'd know as well.
Fantastic. And then your own property journey. Take us through that in a
Yeah,
nutshell.
sure. Like in a nutshell, my wife and or then girlfriend, now wife, we started in about 2010, 2011. That's when we first graduated university. We both were working corporate Australia jobs, and yeah, I mean, we were on relatively good incomes because we busted our ass through university, and
Yeah.
yeah, it was just the whole story for us was all about how do we not have to work? We're from pretty humble beginnings. How do we not have to work, like our parents did, immigrants into Australia? They really paved the way. So that's why we chose property investing. And I mean, I'd love to say there's some sort of sexy story, but it's really not. We just sort of invested, using data, one property after another. And yeah, I mean, just really hard work, dedication, and a lot of sacrifice, I would say, as well, to get to where we are.
I mean, that's when you talk about those type of beginnings, and it's probably again I can relate to it. Right, come to this country with not much in your hand, our parents anyway, but to then go on and what you've been able to change within one generation. Like this country, I just keep telling everyone, like this country, it's something amazing where within a generation you have rewritten intergenerational wealth through property. Like that is just amazing, right? When you think about it. Yeah.
Totally, totally. They talk about like the American dream per se.
Yes.
I hope the American dream is still alive and well, but I feel like Australia, it's a lucky country. It's the place to be, and there's always luck involved in building a property journey. Like, let's be honest. But yeah, I mean, I don't know where else I could have done it except Australia.
I hear, mate, I hear. And that's why when people say, look, our property is a little bit expensive in Australia, I'm like, just look around this country.
Yeah.
Look at the produce, look at the freedoms, the liberties we have. Look at our winters, mate. We're walking around today, it's winter, and I was in a t-shirt.
T-shirt, yeah.
You're in a t-shirt. This is our winter. Let that sink in.
That's it. No, 100%.
Perfect, mate. Thanks very much. You mentioned before, investing in property is a little bit of luck, but it's also luck meets opportunity meets, being able to take action as well, right? So it's the intersection of that. So take us on your own journey as you reflect back, and you mentioned you've been in the market since 2010. So it's good, a good 10 years of skin equity there as well as also sweat equity. So a bit of the highs, successes, a bit of lows, learnings. Take us through what happened and how the journey unfolded for yourself and girlfriend, now wife as well, Pika.
Sure. I think let me start off with the lows and then kind of build up to the highs. I think initially, as a lot of people start, like you want to invest in property, but there's just so much information out there. I mean, back then there wasn't podcasts like this per se, but there was seminars and
Right.
or webinars or 100 different things. These days it's even worse. Every second ad on Facebook, YouTube is about some sort of property thing. And so what I found, and this was the case with us, is we were like completely overwhelmed with too much information and more so like marketing misinformation. These concepts of like 10 properties in 10 years. Anyone on an average wage can do it, retire in 10 years. And I was like, I mean, I hope that's true, but it sounds a little bit too good to be true. You know what I mean?
It's a wonderful tagline, right? Yeah.
Yeah, exactly. So, and I was really into data. I still am, obviously, but really into data. I was an investment banker with a econometrics background. So when like anyone with a kind of skeptical or analytical brain, they sort of reverse engineer what these promises are promising, and they quickly realize that I don't think that's actually possible for me. And that's kind of where we got to with all of these. You'd go to a hotel room with a seminar and there'd be someone saying stuff that was really nice and appealing, but then they'd try to flog you a property at the back of the room at a discount or something. And we were just like, it kind of put us
less of a
off.
dirty feeling almost, I think, at the end of it. Yeah.
Yeah. I mean, you and I can relate to it because we kind of, to some extent, been there and done that. We know the industry, but as someone who was new back then, I was just like, this property industry seems like really toxic in one sense. So that was one of the lowlights, I would say, kind of saying, I know that property can do something for me, but I can't find anyone that I can trust. That was the honest truth.
I said.
And, so then I sort of just took things into our own hands. I had a data background. So I sort of built a system. It wasn't perfect, I would say, but taking 30 to 35 data factors, correlating them using a statistical regression technique over 30 years of Australian property data. I was trying to build some sort of, not sort of magic algorithm, but some sort of method behind the madness. It can't just all be about, buy within 20 Ks of a capital city, buy on a, quiet street, buy a brick house, capital growth to the moon and back, you'll be fine. I was like, well, if that's all it is, then why isn't everyone just driving around Ferraris, every day? There's got to be more to it. And so, when you look at those myths, when you look at people saying, properties closer to the ocean grow more, and then you plot those suburbs, you plot those properties over 30 years, and you find that actually that doesn't stack up, the data doesn't prove it, then your whole concept and perception of property investing completely changes. And that's what it did for us, because we went deep into the data for ourselves, for no one else. Like, we weren't trying to sell anything. It was just for ourselves. So the highlight, or one of the highlights, I would say, was buying our first property, kind of edging towards to the water, so to speak, and buying, taking that plunge, and was like, is my system going to work? And it's not like it doubled in 2 years or anything, but it worked. It's done really well. That was in East Gosford at the time, and and from that point onwards, it was just like, okay, let's refine the system and also kind of learn the street smarts, how to buy under market value, so to speak, how to buy off market, negotiate. And I think the real highlight was just finding a method for myself, really, not anyone else, that sort of was rinsable, were repeatable. That was the biggest highlight. And I think, just to end on a low light, even though I promised I wouldn't, one low light, which I think is worth sharing, actually, is like, I bought this property in Cairns in 2015. At that time, Cairns was dubbed the food bowl of Asia. The Aussie dollar was coming down, therefore tourism was going up. And there was like these billionaires from Hong Kong investing in this big casino project. So, what we always hear, right? If infrastructure is doing well, it's all about the infrastructure. That property market's going to boom. And in the next 5 years, that property, I think I bought for 390 or 400, something like that. It was literally like just worth the same amount. So for that property, I kind of ignored my own data system, and I got sucked into the infrastructure play, and it did nothing. So one low light, or you could say learning, was that, macro factors, interest rates, GDP, Aussie currency, all these macro factors, they're important. They should be considered. But if you invest just solely on them or depending on them, that's not a good strategy.
No, well said. Well said. I feel like it's, what do they call it? A confirmation bias, right? Where you start to then seek out that information. It's like, you could almost say you've got a confirmation bias right now of the market falling. So everything you're reading is about the market falling. And whereas you can flip it on its head going, well, actually, this is a buying opportunity over the next, say, 6 to 12 months where the market, the rates go up. It really depends on which type of media or information you're consuming, and you can build your bias off the back of that. Whereas I feel like you've taken a little bit of that bias out of it, going, right, let's let the data do the talking and help us make that decision. And then maybe a little bit of gut feel, maybe a little bit of talking to then go, right, this could be a worthy investment, because there's data, but the data will only get you so far, right? You still need the human brain to then make a decision. That's probably where things come unstuck a little bit, right?
Yeah, no, and that's kind of, I think that's where the wisdom comes into it as well. Like, you can take a a qualitative or quantitative data point, like let's say the number of social housing in a particular suburb, and it might put you off. It might, you might think, this suburb's not for me, this street's not for me. But when you talk to a local property manager who's, boots on the ground, then they'll say that actually this social housing is completely presentable. There's no hooligans here. It's not rough around the edges. It doesn't even look like social housing. So, you kind of have to marry up the data with real life, what's going on.
Well said. Well said. I'll go back to your example because you mentioned about buying in cans, right? But it's not the cans, it's more the price point that I wanted to chat to you about. So $390, for example, even then that was a good price point. And then what happens is people then tend to buy based on price point, right? So like I want to buy under 500K, for example. And then that lets them buy, say if it's 400 or 450, I can buy two at 400 instead of one at 800. Yeah. So as you reflect and look back on it, is it a matter of the debate is always quality over quantity? And then do I buy one at 800? Do I buy one at 400? Now, they're going to be very different assets, 400K versus 800K property. You must get that question come up from time to time from prospective clients, for example. How do you tackle that, PK?
Yeah, no, it's such a good question. And honestly speaking, I don't think that there is a binary answer to that. Like, I think it's nuanced. Like on one side of the equation, you have, the people who espouse the school of thought that quality over quantity every single time. And that's true, right? However, you have the other side of the equation where it's like, a bit of a vanity metric. I have 8 properties, I have 10 properties, I have 15, which is, meaningless. What are they doing for you?
Yeah.
However, at the same time, I want to make this point that, and it's a really important point, that sometimes we can over egg this argument of quality over quantity. And what I mean by that is, clearly, like I'm in Brisbane. So clearly a property in a place like New Farm, which is going to be more than $1 million, blue chip, quote unquote, that is going to be a higher quality property than somewhere, let's say 20 Ks, away from the city in Peachtree. Let's go with that. So objectively speaking, one is certainly higher quality and than the other. However, if you had bought one New Farm property, I'm just making these numbers up, for $1 million, you could have alternatively bought 3 Peachtree properties for $330 each. So the portfolio value would be the same. And if you fast forward, let's say 2 years, 3 years, 4 years, 5 years, it's the Peachtree portfolio that's outperformed the New Farm portfolio of one property. So it's not that we favored Peachtree just because we are able to buy 3 properties and quantity over quality. No, it comes down to which suburbs are most likely to improve. And it's not just those which are quote unquote blue chip. And you're a broker, you know this much better than myself, Aaron, that when you buy, I don't want to say cheap properties, but when you buy more affordable properties with a higher yield, the bank likes that. The banks like that. They consider that yield or cash flow to be more favorable, and your total borrowing capacity is egged up, just a little bit more versus buying 1 million property at a 3% yield. So I don't know if I actually done a good job of answering that. I feel like I've confused everyone, or myself included, but it's not a binary answer, and it depends on your strategy in terms of lending, and it depends on which suburbs you're considering. But definitely I can say that just at a high level, it's not just about quantity over quality.
Yeah, well said. And you're exactly right. There's so many layers to that question, which is, well, how much deposit do you have? Because that's ultimately going to determine how much you can buy. What does your future borrowing capacity look like? Again, you may say, I want to buy a new farm, but if it doesn't, you don't have the borrowing capacity, you just can't do it. And then ultimately it's, okay, look, 3 properties, but there may be 3 in a row, and then you've got a development opportunity in the future. And you're going, well, hang on, that's not a level playing field anymore. So spot on, a really, really good example. But it's a question that comes up, for a lot of aspiring investors, the vanity metric. I'm like, don't get caught up in the number of properties. Sometimes less can be more, but also what does that portfolio actually entail and how they're performing? So One of the questions that I really want to ask you is, as we start to see rates go up, so it's not even a question, it's a matter of when and how much, as opposed to if, because rates are going up, which is then going to start to change the tide on how investors, perform, how their portfolios grow and develop. But there's something interesting I heard you say, which is rate resilient areas. And I've seen a couple of articles, start to throw this around a little bit, which areas or which type of properties may overcome rate rises and have that level of resilience to it. What are your thoughts and what's your outlook on these type of properties?
Yeah, no, it's a really super question. And I think you kind of alluded to it before, Aaron, that, depending on which type of content you consume, you can be swayed, like, oh, interest rates are going up, therefore property market will come down is a very easy thing to say. But once again, there's layers behind that. So, I mean, just to pick on one layer for today, I suppose, affordability. Everyone thinks that, and it's true to a large extent, that property is unaffordable in Australia. However, that's mostly like a Sydney, Melbourne phenomenon. That also exists in other parts of Australia, but just to kind of generalize, that is mostly a Sydney, Melbourne phenomenon. So if you think about the data, like this data is a year old, so granted, but it's from ABS, about of all the mortgages in Australia, of all the mortgage holders in Australia, those that are paying, I think it's more than, those that are paying less than 25% of their disposable income towards their mortgage, okay, so less than 25%, that is more than 75% of mortgage holders. All right. So in other words, the vast majority of people who have a mortgage across Australia are paying less than 25% of their disposable income after tax as mortgage repayment. So when you think about that, you actually realize that on an aggregate basis, housing is still affordable. Now, if you look at that number for Sydney, it's not less. It's not the same. It's higher. Same with Melbourne. So the question becomes, all right, I am a property investor, or I want to become a property investor. I'm a little bit scared, rates are rising, doom and gloom.
Yeah.
But where are the pockets? Where are the suburbs? Where are the cities? Where are the towns where, maybe it's not even 25%. Maybe where are those areas that people are only paying 10% of their disposable income towards mortgage repayments? And so therefore, if rates rise to, let's say, a more neutral level, whatever that is, let's just say 2.5%, then that is just gone from 10% to 15%. It's still very affordable. It's like no one needs to all of a sudden call their bank and say, I can't make repayments. Right. So I just want to, that's like kind of the first thing to kind of demystify and unpack Australia, because there are 15,000 suburbs in Australia. It's more than just Sydney, Melbourne. And so like the logical next question becomes like, okay, well, where are these areas, right? Like talking so much talk, but where are these areas? And there's literally like dozens of them. And there are no secrets. Like, you've got places like Bendigo in Victoria, places like Tamworth in New South Wales. You've got places like Townsville, Toowoomba in Queensland. And then, you don't have to stick with regionals. You can also go to a place like Perth with the second highest incomes in Australia. And prices are actually going up. Places like Adelaide, price growth is accelerating despite interest rates going up. So you kind of have to like deep dive and understand why that's happening, and it's because of affordability. So there's a bit of a waft, but I feel that was like really important to share, and I think all the good investors recognize this fact.
Yeah, well said. And exactly, just to finish on that point, that's probably a really strong way to finish, which is good investors, because investors aren't created equally. There are a segment of the investor market who will freak out when rates are going up, or lose a little bit of sleep over $10 or $20, or maybe a week or two's vacancy, where there are other investors that have done their numbers, that are confident in their own skin, going, right, we've mapped out the worst case scenarios, vacancy rates, issues with the property, whether that's maintenance, whether that's strata, whatever issues come up, they can face that. And then the other one is from a lending, the other one's macro. So if property prices stagnate, they can live with that and they can sleep with that, whereas others are going to lose sleep. And they're probably the investors that detract from, they're the ones that probably have the loudest voices sometimes and detract others from investing in it because they've had a bad experience as well.
Yeah, no, that's a really good point. And like just yesterday or last night, I was talking to one of my clients. He bought in Toowoomba at a 5.2% yield, and I asked him point blank, interest rates are rising. There's 5.2% yield, even though it's positive cash flow. The property pays for itself right now. In
Yeah.
a year, in 2 years' time, this property may not pay for itself. Like, what is your view on interest rates rising? And he said a very interesting thing to me. He was saying, despite what interest rates are doing, I know that this suburb in Toowoomba, rents are going to rise between $3,000 and $5,000 in the next 12 months, which will
Nice.
more than offset, the additional outgoings because of rising interest costs. And I think we're in this kind of point in Australian property cycle where overall there's headwinds against property price growth on an aggregate basis. However, there are tailwinds in terms of rent increases, where there's a housing crisis and there's
Exactly.
not enough, basically houses in Australia for
Yeah.
everyone who wants to rent. So even though you're not going to get another 20% capital growth across Australia, the rent is going to keep chugging along, and more than
Yeah.
chugging along, it's powering home. So it's a kind of a very unique, I don't think we've been in this situation where the housing market is going to be a bit soft, relatively speaking,
Yeah.
but the rental market is the hottest it's ever been in history.
Yeah. Yeah. Such a great perspective, mate. Thanks very much for sharing. And I mentioned before about some investors going to feel this way, and other investors going to have this sentiment as well. And part of sentiment is built around community. Yeah, and we've spoken about confirmation biases or the school of thought you subscribe to, but a big part of that is who are you surrounding yourself with? How are they lifting you up, and what's the information they're sharing and giving to you as well? And when I talk about community, I would have mentioned at the very start. I mean, again, they're vanity metrics when you talk about how big your community is. Again, we'll talk about quality over quantity,
Yeah.
even in your own community. But I feel like that's one thing that you've really done differently. And it's what I call like the done for you model, which is say the traditional buyer's agents where you give the fee. And I know you've mentioned that a few times, without doing things without a buyer's agent, versus the done with you model, which is I'll help you, but you've got to help yourself a little bit more as well. And that's where your community kind of plays into as well, because they will buy properties, haven't traveled to see them, haven't engaged a buyer's agent, but they're making fairly big decisions for themselves as well. So there's a couple of parts to this question. One is, how have you engaged your community? Have you built that as well to then have a really good following? But then also within that community, how are people then kind of peer-to-peer learning and helping grow each other as well? Because I think that's a really good part of nurturing.
Yeah, no, such a good question. And I think I don't want to take any credit, but I found that in Australia, at least, the dynamic for a consumer or property investor was very much, I have an option to either consume all this free content, just
Yeah.
like this podcast is
Yeah.
great, and have a crack, I'll do it myself, I'll buy a property, build a portfolio myself, or I got to outsource this thing to buyers agents or property companies,
Yeah.
of which there are awesome ones and there are, like in any industry, not so awesome ones.
Yeah. Spot on.
There was nothing in the middle. And when I first started, like I was saying, I would have loved for there to be something in the middle where, yes, I am being taught systematically how to do something, but I'm able to actually understand it and make the decisions myself, as opposed to Aaron telling me, oh, mate, I found this amazing property, sign here on the dotted line, this is going to bring your dreams come true because there's infrastructure project going in, like, sorry, using you an example.
No, no,
But
mate. Far away, mate. I've been plenty of been sold to plenty of times, so don't worry.
but that kind of middle ground, as
Yeah.
you said, what did you say? Done with you. I think that's a cool way
Yeah.
of saying it. That was lacking. So that's where I started my Facebook group, the YouTube community. And yeah, like, of course, I have life experiences and a particular way in which I view the world. So
Yeah.
everything is biased, right? Because I'm an expert in one thing, not in another thing.
Sure thing.
However, the community aspect allows people to also bypass me and talk to each other. Like just this morning on the Facebook group, there's great question. One lady was asking, oh, what are your experiences, guys, on Mildura? And I chipped in saying, oh, look, we were buying there a few years ago. It's probably risen too much now. And then another person said, oh, but there's this pocket that hasn't grown too much and has great zoning and et cetera, et cetera. So it's like, by crowd sourcing not money, but crowdsourcing knowledge,
Yeah.
that is powerful. I find that that's powerful. And of course, a lot of clients come through that community, but then at the same time, I get messages every week from some person who says, PK, I'm not a client, so sorry about that. I didn't buy your mentorship program, but thank you for the free content and the community. I ended up buying in this suburb and it's doing really well. So it's like, that puts a smile on your face as well.
No, absolutely. It means that your heart's in the right place, because if you want people to then go through we'll call it for what a lot of I've seen sales people do is put them through a funnel. You got to buy this, upsell here, for example, and then you get access to me, that's not the case. Great people are always great buyers agents, great brokers, great accountants. They're just going, look, here's my knowledge. I want to give it away because I want to help people not make these mistakes. Whether you choose to come with me or not, it's a very different story. But at least if I can impart some knowledge and some wisdom, at least we can lift the tide and raise the level of conversation a little bit more to have good investors. I think that's a wonderful way to pay it forward.
Yeah, 100%, 100%. And it sounds a bit soppy and fluffy and things like that, but I genuinely have experienced that the number of people that you add value to, you genuinely help, it pays back, then trust is built, goodwill is built. And even if they have already bought a property, a lot of them, through the community, they buy a property. And then for the second one, they say, oh, PK, this time we really want to optimize and not leave any money on the table. We want to do the course. So it's like, maybe there's a selfish angle in it, but really there isn't. It's like, you're just adding value, and the people who vibe with you, they come forward anyway.
Also, and exactly that. The second that you feel like that icky feeling when the word selfish is used, the same way with this. I'm like, you don't have to use me as your broker. In fact, find a good broker that you connect with. I may not be the one that you actually love or connect with, but as long as you know which questions to ask, that'll put you in a better place. That's all I feel like our businesses are we're in the confidence game.
Yes.
So that's to our team. We're not here in the loan game. We're here in the confidence game. Help make investors make confident decisions, better decisions. And whether they go with us or not, we've done our part, which is at least helping them take action. After that stage, that we can lead a horse to the water. After that stage, that's their own decisions. But yeah, I feel like,
and that's the biggest shame, isn't it? Like when someone has some knowledge, you've led them to the water per se, but they just don't have the confidence to take that next step, that sort of just last step. And I remember like 2 years ago in the middle of COVID when everyone was screaming, depression and housing crash and the usual 40% crash theories and predictions came out. And I was trying to educate everyone based on real data, based on economic data, based on affordability, all that sort of stuff. And it's like, it's all there. The writing is on the wall for a pretty solid property growth story over the next 2 years, but you just can't get someone to actually take action. They have to do that themselves.
Yeah.
And it's podcasts like this that really help, I think.
I appreciate it, mate. Thanks very much. Just as the last point, a bit on going back full circle to it personally. So what happens for yourself next? Like the next step, I don't want to probe, I don't want to overstep the line here, but where to next for the Gupta family in terms of what does your next investment look like? What are your future plans and developments?
Yeah, no, great question. I don't know if I have an answer that's crisp and clear, but after many, many years of rent vesting, basically 10 years of delayed gratification, we bought our, quote unquote dream home very recently on the Gold Coast. So we're moving down there, sort of set us back a little bit. So we're not flush with cash per se at the moment.
But you know what? I'll just touch on that because I feel like just what you've said then is rent vesting got you to here. I feel like having a family, specifically now having children, that changes because you go, hang on, now we've got kids. We want to have a stable base, for example. We don't want to keep moving. That's where Bernie and I certainly feel like going, rent vesting was good, but now we've got to a different stage in life, which is children, family stability, want to put roots down. Right, let's think about buying our own place as well. So I feel like, I can.
That's it. No, that's it. And everyone's different as well.
Yeah.
And truth be told, if we had not invested in property, we would not be able to have bought the home that we have bought. So
no.
it is due to the returns that the Australian property market has given over the last 10 years. So we're very grateful for that. And yeah, I think, once we sort of settle down, I think the next thing is just to keep on keeping on, the method or the formula that we seem to be using and clients are using seems to be working so far. Who knows, it might crash and burn tomorrow, but yeah, we'll just carry on.
It's the test of time. Congratulations, mate. I want to say, well done. Well done. It's you've got a story that I feel resonates with a lot of people, whether they're people that have come to Australia, had to build their lives, whether it's people that just, that their parents, and this is quite often people's parents haven't bought property, they haven't had, that role model, for example, that know-how, or people that just want to better themselves. And look, within one generation, how do we rewrite our financial story and then teach our kids to be better with money, or teach our kids that there's a great way to invest in property as well? And I feel like that, what you've done there is lift and raise the bar, mate. So congratulations.
No, thank you, man. I really love that. That word rewire, like we do often as immigrants as well, we need to rewire the way we think about finances, because the way to get ahead is not save necessarily.
And I mean, I probably level with you. We both had, we worked in an investment bank. I had a banking background, working corporate. That was what our parents came to this country to have, that as the outcome for us. Get a stable job, be proud to work somewhere. Going out on our own is seen as much more of a risk. And why would you do that? However, if you and I have a gift and we've got itchy feet being in a corporate, then scratch the itch and go out there and do the best you can, right?
100%, man.
Wonderful. Hey, mate, I want to say thank you very much. Your generosity, your knowledge, your insights, but most importantly, just for being a cool cat, man. I think you just, there's no sales part to it. You don't know how to sell. It's just going, look, I enjoy what I'm doing. It's got me a good lifestyle. Therefore, I want to help others. And I think that's when it comes from that place of love. I think you're so well centered, mate. So you're going to go the distance, man. Congrats on your success and turning your house into a home, mate. Well done.
Thank you, man. I'm very grateful. Appreciate it.